Okay, so this is the IB-323 country assignment number 5, which is the economic assignment. Today I'm going to be talking about Thailand and its economy. Just want to preface this by saying that the Thai economy's growth remains below its potential. The economy is expected to recover gradually, owing to higher public spending and a rise in tourism. However, headwinds to Thailand's economic recovery might spur from weak global demand and political uncertainty, which is something that I've talked about in the previous videos. Obviously, the political uncertainty is a issue, that has been existing for quite some time now. The declining competitiveness of its economic industries due to skilled labor shortages and higher wages pose a relatively large threat to the trade-dependent economy. With that said, the country continues to benefit from a current account surplus. In 2015, Thailand was the second largest economy in terms of U.S. dollars among the ASEAN nations. Despite subdued growth in private final consumption expenditure and fall in exports, a boost in public spending and tourism actually revived Thailand's economic growth in 2015. So that's something worth noting. Another thing in 2015 was in September, the Thai government declared a second stimulus package that was worth 342 billion in Thai currency, which translates to $9.6 billion of U.S. money. And since it came into power in May of 2014, in an effort to support higher investment and household spending, this has been very effective. The Thai economy's growth, as I said, still remains below its potential, but it is expected to recover gradually, hopefully in these next couple of years. Thailand's improved economic performance might arise from weak global demand and political uncertainty. So, as the government is trying to work things out, continuing to do that, that's something that might occur. Both of the services and manufacturing sectors are key drivers of the functionality of the Thailand economy. The country is a chief regional hub for global automobile firms, which is interesting and worth noting for business executives in that sector. With that said, however, Thailand's garments and electronics manufacturing industries are facing challenges from declining competitiveness due to shortages of labor and higher wages. So obviously those are two things that can hinder production and business. And obviously the electronics manufacturing industry is an industry that's been booming in recent years and is expected to continue to. So thus, manufacturers are now relocating businesses to bordering countries in order to benefit from cheaper labor costs. So if you're a business executive, the cheaper labor costs are what you're really looking for here. In 2015, LG Electronics, which is one of the largest electronics manufacturing companies in the entire world, moved its television production base from Thailand to Vietnam, which I thought was pretty interesting. A little bit more. Thailand is highly dependent on trade, which kind of makes the country more vulnerable to external demand and decline in manufacturing export competitiveness. The country's uncertain political environment, obviously we've talked a lot about that, but one more thing is that it might discourage private investment and tourism. So those are two things that are pretty important to note. Excuse me one second. However, nevertheless, low commodity prices and droughts have negatively impacted incomes of more than a third of the population that's employed in the agricultural sector, which has increased debt and limited household spending. So now I'm going to take a look at a couple of charts that I researched. Just displays GDP global rankings out of 203 countries, and it has Thailand 49th. So it's in the top tier. And as far as monetary indicators, there was deflation that Thailand experienced in 2015, but it was temporary and was reversed in 2016. So it was good to see that improvement. Other than that, the Bank of Thailand's implemented policies that really are just trying to keep the economy stable. They've been doing a pretty good job at it, and they're also improving export competitiveness with respect to its regional peers. So there is an existing competition between Thailand and the rest of the ASEAN countries. So, but that competition is good. Competition drives demand, and for a business executive in the United States, this is something worth noting. And obviously, it's a positive indicator as well. And that's really all that I have about the Thailand economy.